6th of May. Warm spring full day after some cold weather here. We are, turning around the grounds. Hello everybody. A lot of happenings around the spring is kind of preparing the nature towards its blossom. We are June soon. After the cold weather, we are finally soon seeing some cherry blossoms, which have been delayed this year. If you haven't already done before, now it is about the time when you gotta report taxes for the year 2021. I want to give a couple tips in regards of that and to dispel the prejudice or taboo that reporting crypto taxes would be complicated. Thanks to the tools that have been recently developed, it's quite easy these days. There is clearly one or two very good options. The first one is coinly.io. It is so compatible with many wallets, and there are a couple portfolio settings which you want to make sure to check out, especially this last one. You want to consider whether all of your wallets are regarded as one. Your wallets on both of those and compare the results and then figure out what is the difference, if there is any. You can review the transactions. In the description of this video is a link that should give you a discount for a pun. Everybody is living through their truth of life, and sometimes it is the perspective that makes one criticize another one, and then you want to consider yourself who you allow to criticize you, and it is just for the sake of mental and physical health, since every human on the planet thinks that they are right in their truth. Yet sometimes one perspective has explored life more than the another. Yet meanwhile, everybody is living in their relevant and relative unique perspective of life that has some considerations which others don't. And anyway, when you consider then who is a righteous and proportionally good person to give you feedback, there is just a pun or saying that if they pay more taxes than you, then you might open an ear for them, in a way or another. Anyways, from here we get to a tip of the day, that is tax reporting. So you can import the exchange wallets, for example Binance, through API integration, and then really important, after you have imported your wallets, you gotta go to the transactions and check out. You can sort out here by the highest gains. You gotta check out that those transactions have accurate label on them. For example, many of Web3 swaps are just swaps, so you gotta label them as swaps. But most importantly, the review process is simple. But still, you gotta be careful, since at least with Coinly.io, it doesn't recognize many transactions. For an example, here is a send to liquidity pool, and it marks it as profit, although it's not yet profit. Update the actual unrecognized transactions. There are much room for improvement still with the reporting tools. So for the couple past days, I have been discussing with the Coinly officers about the matters which are yet not automated on the tracking of transactions. And this, you really gotta recheck this, otherwise the gains will be way too high than what is truly realized. So keep an eye for all these matters. You can begin with the highest profit gains. Anytime you have provided liquidity, there should be transactions with when you send the tokens to the liquidity pool that should be tagged as sent to pool, and then there must be corresponding transaction when you take out of the pool that should be tagged out of the pool. So then those are recorded correctly. Then if you have minted any NFTs, you gotta recheck that the transaction mint is not counted as profit, as it was in my case. So they are still inspecting what is the case, because I was somehow missing the deposit transaction from the mint. There was only a send transaction, and that is the transaction that created the NFTs. So in the minting creation, not actually any value is created there. It is only when you sell them. So you gotta recheck them, and then, according to my understanding, what I was explained, you gotta merge if the transactions are not automatically recognized in case of minting and then selling the NFTs. You gotta merge the deposit transaction with the corresponding withdrawn transaction. And the same is the case when you, for an example, have provided, same might be the case when you have provided liquidity, or in other words, digged a pair on ShibaSwap, or when you have staked. For an example, during the past summer, I staked Leash, and the staking transaction creates X Leash token as a receipt for these were not recognized by Coinly, so they were inaccurately counted as profit, although there is not yet any profit in the creation of X Leash token. So what I did was that you gotta check the creation transaction of X Leash when you deposit it to the pool, and then you gotta find the withdrawn transaction when you take X Leash out of the pool. You gotta check those two and merge them, and that unifies them into the way how it should be counted. So as it turns out, these tools are not yet so good. They are not so compatible with the Web3 DeFi wallets and swaps, that you still gotta review your transactions. And after I reviewed my transactions, the gains dropped by 90%. So at first it was falsely, stating that I had way, like almost 10 times as much gains as I actually had. So I was like, where would be that money? Where it is? Because it was nowhere. So then you gotta go to review the transactions and correct them. For an example, here are two transactions where liquidity was added to the pool. If we check this out here, it was actually add leash and ether to Uniswap. So it is only send transaction here, and this must be tagged as sent to pool. Likewise, this was also adding liquidity, leash and ether liquidity. So it must be tagged as sent to pool. And then you gotta have corresponding transactions when you took the liquidity out of the pool. So then only the total of either loss or profit of those two transactions are counted, whether they are gains or losses. And here again, you can filter currency, X leash. For an example, that is the staked leash on ShibaSwap. And here you can see, for an example, this transaction that is actually taking the X leash out of the pool and transforming it back to, or wait. So this is transforming the X leash back to leash, and thereby we gotta mark it as received from the pool. Yep. And here you see another where it was unstaked, unburied. So it is received from the pool, and you basically go through these transactions and sort them out. Yet an example what is more tricky is that when you try to sort out X SHIB, the staked SHIB, here are multiple options. So I asked the Coinly team to sort this out because it is tricky to find the actual token when it is not recognized here, as this is only the token token hash here. And I asked them to sort these out. Anyways, with these thoughts, be safe, and as everybody knows, the bulletproof transparency is wonderful here.